if you are among the 66% of Australians who own their own home, this is not the news you want to hear. The value of your home is falling. The official numbers are in, revealing home values across the country have recorded their biggest monthly drop since December 2022. For more, Tim Lawless, Cotality's Executive Research Director, joins us live. Good morning to you. You've been doing this for a long time. How significant is this decline?
Good morning, Nat. Well, a 0.4% decline isn't that large, but in the context of things, we haven't seen a fall this large, as you say, since December 2022. And this is the third decline in a row in our national index, and it's clearly gathering momentum here as well as the market moves into the early phases of a downturn. Yeah,
and Sydney and Melbourne and now Canberra, the biggest movers on this. It feels like the others are catching up, doesn't it? What impact has the budget had on all this? Because the government keeps saying it's interest rates that have caused the downturn.
Well, it is fair to say the market was already moving into negative movements before the budget was handed down, and it was clearly slowing as early as late last year. So I think 3 rate hikes, very unaffordable housing, very low levels of consumer confidence are all at play here. But then the budget was handed down, and that's really just added fuel to the fire as such. And it's another downside factor, very much a perfect storm. When you see this many things influencing the housing market negatively is quite unique. Normally, it's a singularity like higher interest rates or a credit tightening or a shock. At the moment, the market's facing a multitude of downside factors.
So the government keeps telling us time and time again that their Treasury modelling shows that house prices will continue to rise at a slower rate and that they'll fall by 2% over the next few years. Is Treasury wrong?
Well, clearly that's not what's happening at the moment. And I think it's really important to remember that the housing market is highly cyclical. We've been through a period of fairly strong growth. We're now moving into the down phase, which was always going to happen regardless of the budget being handed down. So I think over the long term, we should expect that there will be a more affordable housing outcome after this. We probably will see first home buyers coming back to the market eventually. But considering investors are around 40% of demand leading into the budget, we are expecting there's going to be a fairly sharp pullback in that component of the market, which of course takes away from aggregate demand quite significantly.
Yeah, a lot of people will be celebrating this. This was the aim of the budget. The government told us to get people into the market. How long do you think the downturn will be and how sharp?
Well, I think it really depends on where inflation heads and when we start to see interest rates coming down. At the moment, even with housing prices falling and some pretty good buying opportunities, I don't think we're going to see a rush of buyers back into the market until there's more certainty and until we see interest rates starting to come down. A lot of first home buyers simply don't want to buy into a market where prices are falling out of fear of the biggest asset is going to be worth less tomorrow than what it was when they purchased the home.
OK, Tim Lawless, thank you for your time.